You know, the latest NetEase earnings call, it was a real clash of two different stories. On one hand, you had the hard numbers, a financial mess that definitely had Wall Street talking. But on the other hand, management was painting this incredible AI-powered vision for the future of gaming. So in this breakdown, we're going to pull apart that exact conflict.
Okay, so here's how we're going to do it. First, we'll hit the numbers that really drove the market's initial gut reaction. Then we're going to unpack management's whole big picture AI strategy. After that, we'll see how the market actually voted with their wallets. And finally, we'll pull it all together with our take on what to watch for next.
All right, let's dive right in. Section 1, the numbers. This is the story the market heard first, and honestly, it was a story of some pretty stark contradictions.
So bam, the first thing that flashes across the screen is the earnings miss. NetEase's non-GAAP earnings per share came in about 27 cents lower than what Wall Street was expecting. That's a pretty big miss, right? About 15% off the mark.
And it didn't stop there. Right after that, we get a miss on the top line too. Revenue was almost 4% below what the analysts had penciled in. So right out of the gate, you've got a double miss on the two metrics everyone is watching. Not a great start.
Okay, so let's put some hard numbers to that. You can see the non-GAAP EPS was $1.58, when the street was looking for $1.85. But there was a little bit of a bright spot here. Gross profit was actually up almost 9% from last year. And that tells you that even though revenue missed, there are some pretty healthy margin dynamics going on under the hood.
So where's that profit coming from? Well, just look at this chart. It's all about the games. Games and all the related services made up a whopping 80% of the company's total revenue. The takeaway here is super simple. For better or for worse, as gaming goes, so goes NetEase. It's the engine for the entire company.
So you've got these kind of rough numbers as the backdrop. Management has a choice. Do they dwell on the miss? Nope. They decided to sell the future. And that brings us to Section 2, their really ambitious AI-powered vision.
This one quote from the call, it basically sums up their entire pitch. Their vision wasn't about using AI to just cut costs or, replace people. No, it was about using it as a force multiplier to make their creative people even more creative, to help them build bigger, better, and more amazing worlds.
They kept using this term, foundational competency. So what does that even mean? Well, they're not just talking about using a few new tools. They are talking about weaving AI into the very DNA of the company, from the initial design and programming all the way to the art and even the quality testing.
And this wasn't just talk, which is the cool part. They gave some really specific examples. They're using AI to speed up art and animation. In their game, Where Winds Meet, they have over 10,000 intelligent NPCs that you can actually talk to in plain language. They're even building AI co-pilots to help new players get into their more complex games. This is AI in practice, not just in theory. But look, at the end of the day, all this talk about AI, it's got to show up in the games. The success of this whole vision is going to be judged by their 2026 game pipeline. You can bet the market is going to be watching titles like Ananta and Sea of Remnants like a hawk, looking for real proof that this whole AI strategy can actually produce a hit.
All right, so management is painting this incredible picture of tomorrow. But the market? Yeah, the market cares about today. Which brings us to our third section, how investors actually reacted in the heat of the moment.
And this is where you really see the two stories just collide. Management's story was all long-term AI, the pipeline, building franchises that last. But the market's reaction? It was ruthless. And it was all about the short-term miss, that double miss on earnings and revenue, and what it might mean for the next few months. It's a classic conflict in the gaming world, right? Years of development for the next big thing, crashing into Wall Street's demand for results right now.
And that disconnect, it had a very real, very immediate price tag. In the trading session right after the earnings call, NetEase shares dropped over 4%. The market voted with its money, and it voted on the quarter that just happened, not the vision of what might be. So this is the big question, right? How do we as analysts make sense of these two totally different stories? How do we synthesize them? That's what we're going to cover right here in our next call segment, our take on what to really watch for. Okay, here's the breakdown. First, our prediction. The number one single most critical factor for NetEase right now is executing on that 2026 pipeline. Nothing, and I mean nothing, is going to change this story faster than a hit game. Second, what to expect from the price. Get ready for volatility. The stock is basically going to trade as a barometer for how confident investors are in those new game launches, which brings us to our rating. Market perform. We feel this rating really balances the risk from this soft quarter against the huge but still unproven potential of their AI strategy.
All right, for our final segment, let's have a little fun and explore a potential investment thesis based on this whole situation. Let's call this one the asymmetric bet.
So it really begs the question, right? You've got this weak right now versus a potentially massive down the road. Does that create a special kind of opportunity? Well, one way some investors approach this is with something like a long-dated call option. The idea is to bet on that long-term AI story, to capture the upside if they launch a blockbuster hit, while your maximum risk is just what you paid for the option itself. It's a way to play the vision.
And of course, as always, we have to say it, this is not financial advice. It's just an educational breakdown of the events. Thanks for tuning in.